Sure. Sounds good. Well, thank you, David, and everyone. It's an interesting time to be discussing markets here because we do have U.S. markets here more or less at all-time highs, depending on what you look at. We have a K-shaped economy. We have the bond market essentially demonstrating against what the Fed did. We've got tech earnings this week. We got a jobs report and inflation report Thursday, Friday. And then, of course, we have an election stateside here next week, and then plenty of geopolitical issues that seem to be somewhat stubborn. So a lot can happen here. But one thing that I have found, and again, I'd love to hear if, what you guys are experiencing out there and what you're seeing. But we certainly are noticing and have been noticing that this is a very momentum driven market. And essentially what that means is that there's a lot of opportunity, but it comes to the lens of how do the machines want to uh, react. And when we look at that, we notice that obviously we're at a critical juncture, as I said, but also we're at a point in time where there's never been more algorithmic trading than now. And so when I look at the markets here, this is me, by the way. When I look at the markets here, I just have to wonder, where is the momentum going to go next? If we look at today, and I'll show you guys this in just a second, Bitcoin is making a run at fresh all-time highs, 73K. Some of those ETFs are running up. We see great momentum in the Nasdaq 100 just today. That's actually the trade I'd like to share with you how we found that, and just all around a lot of momentum as it pushes through the market. And so, just quickly, I want to just do this for compliance purposes. Trading and investing carries a lot of risk, so please make sure you get yourself educated on this. It's just not meant to be something to do with money we can't afford to lose. And anything I'm going to talk about here today is purely educational. It's really in no shape or form meant to be financial or investment advice. So purely educational. And what we're seeing right now is a very interesting situation where markets are at all-time highs, which is very different from where we were going into 2016 election. You can see momentum. We have these little up and down arrows, which is where momentum comes back into the market. And you guys can all, if you would like to have access to this little tool as well, I can talk about that here in a bit. But you can see momentum coming out of the market there. This is in 2016 in September. And then right after the election, essentially, we have fresh momentum to the upside. So that's the up arrow, if you will, a buy signal. And then, of course, that continued for 5-10-ish%. And the same thing actually happened in 2020. Now, 2020 was a hell of a year with COVID, but we had this very similar situation where the market kind of stagnated and then took off after the election, again, rallying 5% and a momentum buy signal. Now, what happens this time around, I do not know. I mean, I can tell you that when we look at this market, we have plenty of concerns, particularly as the bond market is concerned, and that will matter to your trading and investing activities. And so, like before we go into this trade from today, here, by the way, is the IBIT ETF up 4.44%, meaning Bitcoin is probably tickling to fresh all-time highs, or at least matching them. Yeah, we made new all-time highs, or at least, no, I think we matched them. This is an optical illusion. There you go. Yeah, we're right at the all-time high, 73,000 600 or something like that. I think was the previous top tick. Or actually, no, we didn't quite make it. We're shy by a few dollars. Anyway, so there's momentum there. But I think the real issue here is we have to be aware of this, that the 10-year yield has essentially gone straight up higher by 70 basis points since the Fed started cutting rates. So this is where the Fed cut rates and at 50 basis points, and the bond market basically gave it the stink finger and said, listen, no, we don't believe you. It's not warranted. And the bond yields literally rallied the exact opposite of what the Fed has. So that's an issue. And if we think that will ultimately come home to roost, the equity market doesn't care yet. At some point it will. I don't know when that is. My ability to tell you when that happens seems to be impossible, seems to be zero. but we do want to be aware of this. So it really all comes down to where we're at right now as far as the market's concerned. And that is, again, this momentum. We are in a pure momentum market, and momentum, again, momentum is fleeting, right? Momentum doesn't mean that it has to be, and I'm going to go through a couple of slides here. Momentum doesn't mean it's going to be all in the same thing. It's all just NVIDIA, or it's all just NASDAQ 100, or it's all just whatever, Yahoo stock you're looking at. Momentum is fleeting and it goes from one thing to the next. But as a trader, and this I guess important to understand, if anyone in here truly considers themselves to be a trader, then what you're really looking for is momentum. That's the bottom line. Now, one might say I'm trying to generate income, and yes, there are strategies for that, but that doesn't require momentum, right? That's more income generating than I guess trading in the sense of directional trading. So what we're looking for is momentum. And so when I look at, for example, what is momentum, the way I look at it, I'm going to quickly go back to this slide here. It's essentially a car that goes, let's say, 45 miles an hour, turns onto the highway and speeds up to, let's say, 75 miles an hour. And that rate of change right there, that's my definition. I know the physics definition is a bit different. It's, mass times velocity equals momentum. So P equals M times V. But it's a similar concept. And so that's really what we're looking for. So give you this in a sort of a pictorial format. First of all, momentum is very fleeting. It's temporary. It doesn't forever last. It'll stop and go. That's why it's great for trading. It's not a constant that comes and goes. But the way to look at it, and this gets us into today's trade, is this, right? So this is a trend. This is a longer term trend. In this case, it's Amazon.com. And you can see how the stock was going steady, X miles an hour, and then it paused or slowed down, I should say, and then it reaccelerated. And so what traders often, where they make the most money, and I think where the reward to risk is the best as well, to be quite frank, is when momentum comes back into the market. And that's again, this stock or this car, in this case, it's the stock, of course, reaccelerating from, let's say, 45 miles an hour back up to 75, right? That's really where we make our money. And so the way to kind of think about this is momentum tends to get going just as a lot of people are kind of looking the other way. So if you look at it this morning, and this is the trade that we were looking at this morning in real time for some of our clients, this is the NASDAQ 100 on a 5-minute chart. And if you look at this 5-minute chart, you will see that as the trading day got going, we received a little buy signal there. What you want to look, what I'm looking at is I drew this arrow just before we got started here. We're pointing towards that little up arrow that occurred at 10 past 10 o'clock this morning Eastern time, so New York time, and that gave us a buy signal. And you can see what happened. The QQQ, the NASDAQ 100. This is a 5-minute chart. I repeat, basically rallied for the rest of the day, right into the close, up 1%. Now we try to be conservative with this, which is to say that we want to have a first profit target, which you can see got reached at exactly at noon. I mean, literally at noon Eastern time, right? So New York time. And then we have a trailing stop that just trailed right through the end of the day. So very, 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 really, really good setup. And so looking at a couple of setups here right now, going maybe over sort of on the daily chart, we're seeing momentum just all over the place. Like look at momentum in uranium stocks. And we looked at momentum in uranium stocks. We looked at momentum in lithium, in gold stocks, in some of the tech stocks, of course. And I'll show you NVIDIA in just a minute. And if all I do is follow momentum in things that typically have momentum, right? Like some stocks just don't have any momentum at some point, right? So you could have a stock that's just like you look at a stock like what was I looking at earlier today? I can't remember now, but I was looking at some stock and it just really hasn't gone anywhere in like a year or two. There's no momentum. So there's no reason to look for momentum unless we start getting a signal. But you could see uranium, which again received fresh momentum on September 19th, became a buy and then rallied as much as 29%. Or you look at stock, like one of my favorite stocks, and this is a great momentum stock too. I'll give you this one as an idea. Again, no recommendations here, no financial advice, purely just an educational session. You look at something called Pure Cycle. It's volatile. right? I mean, today the stock didn't do much, but again, today, was kind of a blah day in general, except for the indices, which got bid up what the Nasdaq did. And so if you look at the recent, and then we'll go through a couple other ones, you look at that most recent buy signal that we got, momentum buy signal on September 12th, the stock then rallied as much as 90, let's call it 97%. It's now up still 74%. And then the previous couple of signals, so this one we had a sell signal and then a trailing stop. So basically a scratch trade, probably maybe up a couple percent, or actually maybe lost it 2, 3, 4%. And then the one before, we got a buy signal. We always go for a free trade first, meaning we want to sell half the position, so we have a free position, and then we leave the rest on with the trailing stop. This one made like, I don't know, 12, maybe 7 or 8%. So 7 or 8% lost, let's say 5 or 6 here, so that was scratched. But this latest one is currently up 70%, was up as much as, again, almost 100%. So this is momentum coming into the market, and I think momentum is an extremely, extremely powerful a powerful thing to look at. In fact, if all we do is let's say use momentum in NVIDIA. We currently have a momentum long position in NVIDIA. Now, do keep in mind we have tech earnings this week, so I would be mindful of that as a potential catalyst to shake things up. But again, it doesn't have to be where the trend remains where it is. It's just we are again going to a very, very busy period here starting essentially tomorrow afternoon. But we got a buy signal, a momentum buy signal on September 23rd. And so far, NVIDIA is up about 20, it's called 22%. Previous to that, a momentum sell signal, which got to the what we call the risk, what we call the free trade. So we were able to close half the position because it did go in our direction for 5, 6, 7%. But then the remainder would have gotten stopped out at, let's call it minus 7 or 8%. So we probably lost maybe 2% on this trade overall. The one before, small buy signal, same deal, would have gotten that one essentially for maybe a gain, ultimate gain of maybe 2%. And then the one before, probably that one would have probably resulted in about a 5% gain. And then the one before that was, let's say here, this one was the last one, would have gotten us out at a gain of about 33%. So let's call all these in here a scratch, which is then basically we had a 33% gain and a 12, 13% gain on this one. This is just following momentum. And so by just following momentum, we can trade less and we can just let it work out, right? So we had a buy signal on December 13th last year. That one ultimately got stopped out for a gain of 80%. So if this is all I do, I can do really, really well on things that have momentum. But it is important that we follow momentum and respect it. So when it turns, even just for a little while, it's a very non-emotional. So I'm able to keep my emotions at bay, hopefully, right? And that's really what this is. So even here, when momentum turned, I mean, this was essentially a scratch trade, but it enabled us to get right back in for, in this case, a gain of another 35%. And of course, I can buy a call option if I really want to, or I can, dig up my grandmother and try to win the lottery and not to be too morbid and take up a huge loan and buy call options with that. And I'm kidding, but it's sadly we're at, a lot of people are gambling right now. But momentum is really, really important. And I think momentum could really help us stay on the right track. If you guys have any stocks you want to go through, I'm happy to do that. I had a couple of this morning I was talking to some people and a couple of people were wanting to look at something like what was one of the questions? One of the questions was ARM. That's, I guess, in the same space, so probably not too surprising that this is interesting, but we can look at something totally different. So this is ARM. This again, just all we're doing is trading momentum. So ARM had, since November 7th of last year, so since more or less 1 year, so for the past 12 months, ARM had 1, 2, 3, 4, 5 signals. So let's just not to take too much time. Let's just look at the past 3 signals. Okay, so we had a signal recently on the 12th of September. So far, this one is up now 13%. Just momentum. Then we had a sell signal that would have lasted for about a 12% gain. Again, this is without even using options. We can, of course, buy options with that if we really need to or want to. And then the last one here, or the first one back in May that lasted through July, one trade, this one made 38%, right? And so you have to ask yourself, with four trades since May, isn't that maybe a little bit less crazy in terms of the amount of time I need to spend? And this is, a 30, what did we say? This one came to a 33% gain or 40% gain actually. Then we had maybe a 10% gain. Then and then whatever we're up right now, 12%. So let's call that 60% of gains. And since that first signal, the stock is up 38. So that's with just one, two, three trades. I could have bought the stock and be up a lot or be up, let's say 60, 70% more than that with just four trades. So that's the kind of stuff that I like to do. And I do want to quickly mention, if anyone likes to use momentum, you can actually use this indicator as well. And then we'll go through a lot more tickers here for those people that would like to look at some other tickers. But if you like this kind of stuff, you guys can actually install this indicator on the following platforms. You can install it on like NinjaTrader. I'm using TradingView here to demonstrate this. It works on MetaStock, and it also actually, as of this week, it works on Thinkorswim. We're actually just still working out a couple of kinks, but it's there on Thinkorswim. And so if you want to use this thing, and we even send out some trade alerts on like the SPY and the Qs and things like that, you can use this. All you have to do is go to the link down here. You can go to the steadytrader.com/trender, or you can call our team as well. It's $397 a year for the indicator. It includes weekly sessions. I send updated emails with where the trends are going, which were the trends, and you've got things like the triple play strategy as well. So that's an additional three strategies that I teach you in this as well. So for just $397 for the year, I think that's a hell of a deal. So you guys can go check that out at thesteadytrader.com/trender. You can use credit card and PayPal and all that kind of stuff. So that's what that is. If you want to call someone, you guys can call our team. It's 401-203 7389 is how you can get a hold of our team. So that's the deal. And let me go through a whole bunch of tickers now, because there's a whole bunch more that I would like to show you that are working out real well. And in my view, will continue to be good momentum stocks. So one of them I actually already talked about, and that is uranium. And I actually want to quickly get back to this one because of where this is. So if you look at uranium, URA, we got, let's say, look at the last three signals. So we had a buy signal that resulted in a loss of about 7%. So this one totally didn't work. Then we got a sell signal. That one had a gain of about 8%. Let's call that a scratch. And then we got a buy signal that so far is up about 21%. And that's really without a whole lot of emotion. In fact, I hope no emotions is really my kind of strategy. But if you look at your uranium now, the URA ETF, and there's other ETFs out there. I'm not trying to be a pitch, a sort of a pitch man for this ETF. That's not the point. But you look at uranium, I look at the weekly chart, there's a lot of demand, and we can go through the reasons why URA, and there's stocks like CCJ, Cameco is a company that is a uranium provider. If you really have to go into a single name stock, even though this stuff's volatile enough. But URA, you can see, really been basing essentially for 3 years now. I mean, actually, literally 3 years. And there's a good chance here it's going to start taking off. And when this thing takes off, it's already had a big rally here, as you saw, which we picked up from a momentum perspective. I showed you here. We got the bicycle the 19th of September. I mean, this can easily go, and this is one of my favorite ideas here. Again, through the elections, who knows? But sort of beyond that, I mean, this has 25, 30, 50, maybe 100% upside over the course of time, and it can happen pretty quickly, depending if we hit the right pressure points as far as the setup goes. So that's an interesting one. Then you've got totally different stocks, like something like a 3M, right? So this is a stock, and I know this is not a stock that a lot of people consider to be sexy, but it's actually very sexy. So here is this is a good momentum stock, in my view, at least, or it has been at least, and I think it's going to continue to be so. So you look at this stock and you say to yourself, okay, well, if I just look at this stock and all I did is respect momentum, nothing else, forget everything else, forget the news, forget the analyst reports, forget the headlines, forget screaming people on TV with views of and having to sell stocks. What you'll get to is a point where momentum just kind of takes care of itself. Now, I'm not here to promise the pie in the sky, but you look at that first trade here, that would have ultimately resulted in a gain of about 13%. So this was a buy signal last November into January, one trade. And again, I could use options on this if I want to. Then we had a momentum sell signal that was more or less a scratch. It was a little bit profitable, more or less a scratch. Let's call it a scratch. Then we got a buy signal that was good all the way until here. That's a gain of 58%. And now we're getting a sell signal. And if I want to be super simple about it, which is, I think, to start a good idea, I can just literally go from signal to signal. That's it. Literally from signal to signal, meaning up arrow or hold it until there's a down arrow, and that's it. What we don't want to do is do a trade in what I call the chop zone. So if you already have a momentum like this, then that's fine. But if you get signals inside of a chop zone, that's a waste of time. Like, for example, small cap stocks right now are in a chop zone, or this stock here was in a chop zone in that period. Now, in this case, we had a valid buy signal that allowed us to hold through that chop zone. But if we were to get signals within this, that would not be interesting enough. That would be more or less a waste of time in a sure way, at least for me, to raise my blood pressure to a point where it's just completely counterproductive, right? And I don't know how many people in here are day traders, but I mean, just to quickly go back to what I showed you here a second ago, we can look at this through the lens of intraday action. So again, this was just today on the NASDAQ 100, so I figured I would show you that one first. So right after bat this morning, or about 10 past 10 Eastern time, we received a buy signal, and that took us more or less into the close, up about 1%. We reached our free trade position here. So basically what we want to do is we want to sell about half the position at here, and then we can leave the rest on with a trailing stop. That's kind of the basic idea of this. Or I think CRW was another one we were looking at here this morning. Give you an idea of this one. So this one had a really good buy signal, and then it got really, really choppy in the afternoon. And once you get to the close, I mean, there's not much reason to do anything. But like right out of the gate this morning, and you can see this is today. This is Tuesday. We got a buy signal that would have stopped out for a gain of 2.4%. This is intraday. This is not a like on a daily chart, right? That's in one day. And then we got a little sell signal, but again, right at the early afternoon. I mean, at this point, you probably want to just take your chips and kind of go home, right? But I could buy a call option here if I really needed to lever my bets. I mean, that's the kind of stuff that we like to do. Then Pfizer was another one. I'm sure I'll show you this stuff today. And again, this is purely based on momentum. That's all there is. So Pfizer, again, the afternoon got very choppy, really not hardly. I mean, the whole market didn't do anything this afternoon, but we got a sell signal more or less right out of the gate. That one certainly got to the free trade target, and then ultimately would have stopped out for about a gain of about 1.4%. Again, that's intraday, so I could have bought a put and so on and so forth, just as well. And let me quickly change the thing here so that we have the proper viewing angle on this. So like, for example, this is one that I think a lot of people liked. I'm just trying to show you one that I was watching, and you guys might find this helpful as well. So this was Morgan Stanley, for example, again, intraday 5-minute chart. And this was last Friday. So let me just quickly zoom into this. And again, there's no other consideration here for this. It's literally just a sell signal on Friday. I was on the golf course already when this happened early afternoon up in DC. Actually, this happened in the morning. Sorry, I'm thinking of a different stock. And we got a sell signal, and it reached that free trade target right there. That's those green lines, very small. But then the remainder position would have kept on for a total gain of about 1.5%. And again, I can do this in indices like I showed you in the QQQs. today, and so on and so forth. But again, this is purely based on momentum because, and the reason why this, in my view, works is because we increasingly live in this world of algos. That's nothing new. It's just becoming more and more sophisticated. And so these algos are out there banging around stocks all day long, and they create momentum. It's a self-fulfilling mechanism, is what it is, and that's really the bottom line of how this works. So Nathan is asking, can you use this on futures? Well, there's no better way to answer that question than to just show it to you. So here are the last two signals, Nathan, and you tell me if it works on the E-mini S&P 500. So let's start with today. This morning we got a buy signal, and you see where it is right now, right? So that's all it is. It's just momentum, right? So here we are, right there, right? Up 36 basis points. Again, today's a slow day, as you probably know, Nathan. And then before then, this was yesterday, we got a sell signal, and this is a day trade, right? So you want to close this out before the day is over, but that was also nicely profitable, right? So I guess the answer is in my view is yes. That would be my best way of answering that. If you want to use this indicator, by the way, I should bring it up again. You can install it on a few different things. Like again, I have TradingView and Thinkorswim that's brand new this week. You can also be using Metastock and NinjaTrader. And if you want to check it out, you can go grab it for a full year's access. We also have lifetime deals, but if you want to grab it for a year, $397, and you're good to go. And David, I know we're pretty much out of time, so I'm gonna kick it back to you. If you guys have any last second questions, I'm obviously more than happy to stick around. Looks like we're good. Bill's asking, how far out do you buy options? Um, I don't do short dated options because, once you've done this for 25 years, um, you know what happens. I think a lot of people are about to find out. So it depends I don't know if Bill, if you're talking about a day trade or a swing trade. If it's a day trade, I will use options that expire, within, 2, 3 weeks. I don't do zero DTE. That's not my thing. Um, or if it's a swing trade, I typically use options that expire at least 55 days out. That's me. You guys, by all means, do whatever you please. I've traded options for 20 years now and done this for 25 years, and I know what happens. So I use very, very short dated options. Unfortunately, nothing in the works for TradeStation, but we do have it available, as I said a second ago, for TradingView, Metastock, Ninja, and Thinkorswim. So hopefully that addresses your question, Bill. And you guys have any questions? Oh, and if you're joining, by the way, we're gonna do live trades right after the election. November 6th, 7th, 8th, that kind of period, we're gonna start doing live trades because I think there's gonna be big opportunities after that. And if you guys have any questions, you also call my team as well. And I think David's putting in the link there. So I know I'm out of time, so I'll pass it back to you, David. And again, I hope this was helpful, folks. Thank you, Bill, and everyone else for asking questions. I hope it's helpful, and we'll see where this goes after the election.